Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, the bulls played some very good defense now for the second day in a row, protecting some very key levels on both the SPY and also the NASDAQ. However, the rest of the market wasn't all that rosy, guys. We did have some good rotation in a few of our more defensive sectors, such as healthcare, utilities, and real estate. However, one of your sector leaders, guys, that's been kind of upholding the SPY over the last 2-3 weeks of trading had a very negative day, and that was more specifically financials. Take a look at some of their declines on financials today. JP Morgan, the industry leader of the entire financial sector, guys, was at one point down almost over 8% on the day. And the damage to the rest of the banks was pretty decent as well. Take a look at this. Wells Fargo, top to bottom declines 4.37%. Bank of America as well over the course of the day, top to bottom declines of well over 3%. We can go even further down this list here, guys. Citigroup as well was pretty badly phased, 5.13% to the downside. One of your insurance players as well, Ally Financial, coming down 17.62%, their largest decline since March of 2020 during the pandemic. And the damage didn't stop there, guys. Even some of your smaller credit card issuers were down as well. Capital One Financial ending the day down about 3.23%, but at one point they were down over 6%. And even a company like Discover Financial Services, guys, and they are now down 2.25%, but at one point on the day, they were down over 6.5%. So what exactly happened in financials today to warrant such big declines, guys? Well, I'm happy you asked. We're going to take a look at that and the first part of today's video. Thereafter, we're going to take a look at our major technical analysis rundown of our major market indexes and get a gauge of how the rotation is currently playing out in the markets. And then second, take a look at our big tech names and see whether or not there's still some very good deals to be had in some of our favorite tech names out there in the marketplace. Lastly, what I have prepared for you guys is I'm going to give you guys about 6, 7, 8 stocks that I'm very closely monitoring for some swing trades in the upcoming days and the upcoming weeks as well, just to let you guys know exactly what I look for, my thought process behind each company, and the technical setups that we're looking for here. So a lot to cover in today's video, guys. Let's jump right into it. So SPY up a very healthy 0.44%, but it was not always the case. SPY really oscillated between, positive and negative all throughout the morning before putting in a beautiful rally in the later part of the afternoon. And the QQQs largely kind of followed the same path throughout the day. Let's take a look right here at your heat map, and you will see that most of the upside was led by big tech, Amazon and Tesla having very good days, Meta, Google, and Apple not so much, but Microsoft and NVIDIA, AVGO really helping the weight to the upside in your big tech names. Consumer defensives, fairly mixed on the day. Energy, not having a great day at all, guys. The price of the barrel is now down to pretty much 52-week lows on oil. The barrel trading right now at about 66. We're now challenging some support levels all the way back from March of 2023 and even as far back as 2021. So that is why oil continues to be a relatively weak sector as of now, just very closely tied to the price of the barrel. Real estate remains your outperforming sector, healthcare with a very decent day, and as we have already covered, guys, the banks really suffering the brunt of the damage over the course of the markets today. In terms of your one-day relative, you can see that even better. Real estate, technology, and consumer cyclicals actually coming back roaring. And to the downside, unfortunately, financials and energy really weighing down that sector of the market heavily as a whole. So what exactly happened, guys, in terms of financials? Why were the banks down tremendously today? Well, it has to do with two things, guys. Number one, we got some revised guidance to the downside by a few major banks, which kind of spooked the rest of the industry. And number two, we had some reforms to some Basel III propositions. If you guys don't know what the Basel III agreements are, those were agreements put in place after 2008 to make sure that the banking system, the global banking system, is well capitalized in the event that we go through another recession. Very simple explanation, guys, is they want the banks to have enough cash in reserves in the event that loans start defaulting. The banks have enough money to cover up those bad assets. So that was the gist of those reforms here today. So let's get into it right now. So bank stocks fell broadly after Goldman Sachs CEO David Solomon said late Monday that trading revenue could fall 10% this quarter. That is very important for them, guys, because a lot of the boost from Goldman Sachs in the last 2 quarters has been as a result of their increases in trading volume and increases in trading fees. So this negative guidance definitely did not help Goldman Sachs out today. We didn't go over them in the intro, but as a whole, guys, you can see the damage was done to Goldman Sachs 4.39% down, and to the peak, over 6.5 top to bottom. Let's continue. On Tuesday, JP Morgan Chase tempered expectations about income from interest payments. We know that net interest income is one of the largest contributors to a bank's bottom line. Now, obviously, because JP Morgan tempered the expectations about net interest income, we can possibly expect that the bank's revenues are going to come down. However, do not forget, guys, we're coming into a rate cut cycle. So this lowered guidance from the banks right now could just be sandbagging their own expectations, right? When rates come down, that'll kind of come to counterbalance these slowdown concerns, especially in net interest income. Now, let's move on. Also, the finance chief of smaller consumer lender Ally Financial said credit challenges have intensified this quarter, sending its shares down 17.6%. They are now acknowledging that the consumer is slightly weak and that the labor market is slightly deteriorating as well. Ally Financial, most of their business has to do with auto loans, guys. So when they say something like this, we have to listen. Now, this was very peculiar for Ally Financial because of the fact that usually we would only expect that guidance to come out on the date of earnings. And as we can see, guys, earnings is still a large or a very long time away. It's still far in the future, right? October 16th is going to be their earnings. So possibly coming out right away, giving that negative expectation for their earnings guidance and possibly mitigating any future damage to the company. But that was definitely not good. Now, let's move on. The warnings from banks overshadowed an announcement by the Federal Reserve's regulatory chief of a plan to significantly ease an earlier proposal to raise big banks' capital. This has to do with the Basel III agreements, guys. In terms of exactly what was said today, well, there was a number of different changes, but the biggest one was that prior, there was a proposition to require banks to hold about 19% of all loans outstanding, the value of all loans outstanding. There would need to be 19% in loan provisions, basically cash on the sidelines in the event some of those loans start defaulting. That 19% figure with this most recent amendment today was revised down to 9%, so a lot lower. So technically this should be a good thing for the banks, but then again, all the negative guidance from these companies specifically kind of comes to offset that better news that came out of the Federal Reserve this morning in terms of the loan provision requirements. Now, a lot of the action today is being driven by concern the banks are lowering expectations for earnings for the current quarter. The news from JP Morgan, Goldman Sachs, and Ally stole the show because they're saying that fundamentally their business is slowing down. But once again, guys, that is going to be kind of offset and counterbalance with the decline in the interest rates over time, right? So possibly these rate cuts are really starting to get, are really going to be put in place at a very good time for the banks when the banks are starting to see that net income kind of decline as the amount of loans outstanding that people are applying for are kind of going down as the economy slows down and the interest rates are still very high, right? So we'll keep an eye on the banking sector, at least for the next couple of weeks, as we kind of iron these little details out. But I'm still very bullish on the sector, especially leading into rate cuts as a whole. So now that we're moved on from that, let's jump right into our technical analysis portion of the video, and let's go over our SPY. So SPY reacting very, very nicely, guys, from this big zone of support. We were talking about this for a while, right? 546 all the way down to 538, protecting it very nicely, and now also securing a nice hourly uptrend into the tomorrow session. So the bulls are now in control of this short-term bounce. As I've said prior, guys, we need to focus on this level right here, 555. Get me as close as possible to 555, and you can set up the bulls for a possible daily uptrend recapture, and maybe even set the weekly higher lows and make an attempt here, guys, at recapturing closer to the all-time highs as we get into the end of the month of September. That would be a very good scenario for the bulls because we know that the month of September is notoriously weak. So we'll keep a very close eye on the short-term price action. What I like about the SPY, guys, is we have continuous rotation across the board. Financials has a bad day, QQQ is there to make up for it, and healthcare is up there to make up for it as well. The other day, healthcare was having a relatively bad day, and we had financials and QQQ making up for it. So the rotation in the markets right now is very, very healthy. There is still an overarching rotation from tech and growth into more value and defensive oriented names. But we can see that even when the more value and defensive oriented names take a little bit of a breather, QQQ is there to pick up the slack. And that's exactly what we want to see. So I don't see any red flags in our rotation just yet. Moving on to the QQQs. QQQs not looking too bad either. Let's have a look, guys. We know that we're in a massive daily downtrend right now, and now the bulls are trying to engulf this move as best as they can, get us as close to 465.51 as we can, guys, and you can possibly set up for either the engulfing move and reset the daily uptrend, or possibly just reset the daily uptrend from here. I wouldn't say the bulls are out of the woods just yet here, guys, but definitely not looking too bad to start off the week. We'll watch very closely how this price action evolves. In terms of the QQQs on the weekly, definitely not looking as solid as the S&P 500, but just keep in mind, guys, even if we lose this move right here and proceed to the downside, we have a very, very big area of support on the weekly, and that is 445 all the way down to about 432. The one drawback is in the event we come all the way down here, possibly the best we can expect, guys, is maybe a tightening range. The worst case scenario, of course, is the weekly downtrend flush. As of now, there's no signs of that. We still do have a lot of space between us and those flush levels, but just keep a very close eye on this rotation here, guys, especially in some of your larger big tech names, right? We'll take a look at big tech a bit later, but as a whole, big tech is playing good defense around their respective levels, which is really preventing the QQQs from kind of falling off of a cliff. So I like this one. We will keep a close watch on the hourly uptrend to gauge when this daily bounce is going to be finished, and at that point, how high have the bulls gotten to warrant a potential daily uptrend shift back to them. Now, moving on to XLF financials. Financials down about 1%, but as you can see, where did we kind of bounce off of over the course of the day today? Well, our previous all-time highs, this yellow line right there. So what we possibly are expecting from financials right now, we do have a daily downtrend in motion, right? So we'll keep a close watch on the price action. But in the event financials continue to be a little bit weak here in the forthcoming days or weeks, well, daily downtrend will be continuously underway. And as we've shown multiple times on the channel, guys, this is a beautiful weekly uptrend. We are expecting some weekly consolidation. Where could that maybe bring us into? Probably between these two yellow lines right there. Let me make that a little bit cleaner because obviously I can't draw straight lines, unfortunately. So this area right here, 44 down to about 43.50. This little pocket, prior all-time highs, resistance, the 12 EMA on the weekly is sitting right there. Maybe just expecting a weekly higher low for possible further trend continuation in financials. So this one big day of downside is not enough to pretty much spook me out of financials. As long as we're still in a beautiful weekly uptrend, guys, I don't really see any red flags for the sector as a whole. Now, moving into healthcare. Healthcare up about 0.46%. Not too bad of a day for healthcare as a whole. I'll remind you, what are we looking for in healthcare right now? This was a very nice daily uptrend. Unfortunately, they lost it by flushing these lows. So now the bulls have to do a great job of getting it back. So we will watch the size of this bounce. If they can get a 100% engulfing bounce, it gives them the opportunity to either V-shape this to the all-time highs, reset the daily uptrend higher, or at least possibly do the two-step recovery process, something like that. All in all, though, financials are not looking too bad at all. Hourly uptrend is recaptured, so we'll keep a close watch on this hourly uptrend. As we've been saying, similar to financials kind of, right? We know that because we lost the daily uptrend, we are now in weekly consolidation for XLV. So just in this case, looking for a possible weekly higher low for possible further trend continuation. In the event healthcare sacrifices all these gains, rolls over into the daily downtrend, guys, I will be sitting probably right about here with some buy orders on healthcare, talking about the 151, 150 level, looking for that weekly higher low for possible further trend continuation. This would be good confluence, guys, prior resistance, which is now support, and the 12 EMA right there too. Now, moving on further, let's dive into SMH. SMH Semiconductors trying to muster together a little bit of a rally. As you can see, the entire sector was fairly green over the course of the day today. Your winners are obviously AVGO and NVIDIA. The rest of the sector kind of lagging behind a little bit, but it definitely helps when some of your largest weights in the industry, especially AVGO, puts in a 5% day, right? Did a good job in holding up SMH. But as a whole, guys, I'll remind you, what are we in right now? Daily downtrend for SMH. So we'll be keeping a close watch on this guy right here, 228. If we can get above 228, it gives us a chance to possibly set in motion a daily uptrend shift and really start taking back some of this weekly damage that's been done, right? Now, keep in mind, we are coming into a big area of resistance, so it is going to be a bit of a challenge for the bulls. 237 down to about 224 is going to be those levels. And this one kind of looks like the QQQs as well, right? Even though we had a good bounce, the bears have taken back so much of this move right now, guys, right? Take a look at the size of the pullback from the bears. Almost 78%. Now, that does give them an opportunity here, guys, to either, evolve into a tightening range, or at the worst case, kind of set up for the weekly downtrend in one clean shot, or maybe the two-step weekly downtrend process. So we'll keep a very close eye on this. There is a very nasty head and shoulders pattern right now on the chart as well. So as a whole, guys, I'm still playing semiconductors in a very, very defensive fashion using short puts, because we know that a lot of these gains, when we have them, they've kind of been short-lived, right? Other than that massive rally that we've had, we really haven't had much else of everything in terms of momentum over the last 2-3 weeks of trading. Now, maybe that can start in the next few days of trading, but I have my, I have my reservations about those moves. So the way I'm playing semiconductors more specifically is I am writing short puts, usually about 8 to 10% under current market conditions on individual names. And that is how I will continue to play semiconductors. I'm not really throwing any long calls or shorter term upside swing trades on this. I would rather just sell options below the market on this industry as a whole, as the volatility is pretty good and we know it is fairly weak. So these short-term bounces can be relatively short-lived. Unless you're day trading call options or stuff like that, it's going to be tough for me to hold on to positions over the course of multiple days with high conviction, knowing that the sector is kind of out of favor. Now, moving into the IWM Russell continues to be slightly weak. And as a matter of fact, today, guys, we've lost potentially losing a crucial point of support right now. 210 all the way down to roughly 207, right? This yellow box kind of breaking down below it. So the last thing you would want to see right now is possibly the bear setting up for a lower high, using the upper bound of 211 as some resistance, and then just flush, right? Because then we would lose all of the price structure that we fought so hard to maintain since the early month of July. That being said, this sector is going to maintain weakness, in my opinion, as we continue to get those recessionary headlines. It is very tough for growth stocks to run, guys, when we are in the midst of recessionary headlines. It's probably not going to happen until we put some ease, or until we ease some of those concerns, right? So daily downtrend massively underway, probably just expecting a lower high into potentially lower low scenarios. On the weekly as well, you can see big pullback on the weekly here, guys. The best we can possibly get is maybe just a tightening range around these levels. And the worst we can get, of course, is a revisit of this level down here, talking about that 197, 196. Personally, myself, I will only be looking for long positions if we really get crushed here, guys, down into the lower 190s. I'm going to be very greedy on this sector just because it's out of favor. And when things are out of favor, I need to get a very good price. Moving into the Dow Jones now, Dow Jones performing not too poorly, considering the fact that a lot of the largest weights in the Dow Jones are companies like Goldman Sachs. So very impressive for them to only be down 0.23% today. That being said, the Dow Jones is still kind of battling right here. We did have a very nice daily uptrend in motion, and unfortunately we lost the higher lows. So now the bears are looking to capitalize and set up for the daily downtrend shift. If they do get that daily downtrend here, guys, just going to be looking for further weekly consolidation. Gorgeous weekly uptrend, no red flags as of yet. The bulls still do have a lot of space, anything above 38,500. Just looking for a weekly higher low for possible further trend continuation. I'd pay special attention to this yellow line back here. Prior all-time high resistance should be newfound support, and that is roughly around that $40,000 psychological mark. So the Dow Jones not looking too bad. No major red flags to speak of just yet. Still in a very healthy longer form uptrend, right? Now, what's really killing it, guys, as of recently, have been bonds, right? So we know that because rates are coming down, bonds have been a favorable sector. Couple that with the fact that we are expecting possible recessionary headlines. Usually bonds are a very healthy defensive play. As we can see, there is a very nice weekly uptrend underway right now on TLT. And for the first time in a very, very long time here, guys, we are now on a weekly time frame above all of your short-term moving averages, the 12, the 26, and the 50. The 200, not quite yet, but as you can see, guys, it has been a very, very long time since the moving averages have crossed and that we've closed some weekly candles above it. As a matter of fact, it's literally been 4 years. So I do expect this one to continue to outperform in terms of coming into rate cuts and possibly over the next 1 to 2 months as we continue to get those recessionary headlines and the market plays a little bit of defense. So very happy with the way this hedge has been playing out for us so far. Now let's move into some big tech names, shall we? So moving into Apple right now, Apple down about 0.36%, still a little bit weak after their iPhone event yesterday, was kind of lackluster for a lot of people. I mean, let's be honest, it was a very decent event, right? They had great new features for their AirPods 4. They had a beautiful new watch come out in the Apple Watch, and they also had some very decent features in terms of the iPhone 16 for AI capabilities, right? Artificial intelligence, Apple Intelligence. They call it Apple Intelligence. But anyways, very, very cool features to say the least. The reason that I say it's kind of underwhelming is I'm not yet sure, guys, whether it's going to lead to a massive upgrade cycle for iPhone users. That it remains to be seen, right? But in terms of their price action today, they are still holding this big level of support that is crucial to them, 220 down to about 215, right? Daily downtrend is underway right now, but we are holding that support. I would be very cautious in the event we break below that 214 further into the daily downtrend, because then, guys, we are probably going to be heading a little bit lower here. The next big area of support is all the way down here at about 207. The bulls do have a lot of space, right? We're trying to set up for the new weekly uptrend. They had the weekly uptrend here. They lost it by flushing these lows. Now it's a very long and drawn out process to get those weekly uptrends back. So pay special attention right now. We're looking for the weekly higher lows, but in the event we break that 214, 207 is where we might likely fall for Apple. And at that point, it's going to free up maybe some short put opportunities. 205 down to 200. That is where I want to be playing Apple specifically myself. So not looking too bad on Apple, but just keep an eye, guys. The weekly MACD looking a little bit weak. Looks like it does want to cross a little bit lower. So in the event we do start falling off, you may start seeing me play some swing trades on Apple in the lower 200 area, which I've been kind of waiting for now for pretty much the past 3-4 weeks in a row. Now, moving on to AMD. AMD putting in some nice gains today, not going to lie, right? 3.39% to the upside, not looking too bad at all. And the bulls are finally starting to gain a little bit of steam, a little bit of momentum, right? Take a look, daily MACD looking like it does want to cross to the upside. So we'll keep a close watch on AMD's price action over the next couple of days. One thing's for sure though, guys, still in a very large form daily downtrend. The bulls are trying to recapture as much of this move as possible. Take a look at the size of the bounce right now, all the way up to 61%. So in the event we cannot get the full V-shape going, the bulls have created enough space between us and that 132 to really maybe even start a two-step recovery process if they can't get the full V-shape in motion, right? That, plus the fact that we do have nice support below us, that whole 137 to 135, this area of congestion right here, it does lead us to believe that the bulls do have a chance as long as semiconductors continue to have a little bit of bounce underway. So AMD, not looking too bad at all. The way that I continue to play this sector, guys, is in the event when we get some red days, I'm looking to write, once again, short puts on AMD, anything below 130 down to 125, staying a little bit more defensive because we know the sector is kind of out of favor right now, right? In terms of the weekly's not looking too bad at all. So we know what the bulls are trying to do. They're trying to set up for the weekly higher low and go for the weekly trend change. We will see if they can get that done in one clean shot, or maybe if AMD has to consolidate in a bit of a tightening range before it starts to move a little bit higher here after the month of September, right? September seasonality may not be kind to semiconductors and growth stocks as a whole, but AMD not looking too bad at all here, guys. There is a swing trade opportunity to possibly go for the 159, right? If we set our stops below here, we're looking at about $10 worth of risk. Obviously, it's not as good as when I proposed this play yesterday, but there is still a little bit of a trade on the table here. Stops go below 132. And then we are targeting the highs right here, 158, 160. So decent risk to reward, guys. Not quite a 2-to-1, but a decent trade nevertheless. Moving on to Amazon. So Amazon also 2.37%, guys. Amazon kind of really looks poised to start breaking out here the higher levels, doesn't it, right? So Amazon, this could be a very interesting breakout trade for those of you who want to take the gamble on Amazon. In terms of the risk reward profile for the trade right now, it's not too bad, right? So the stop loss would have to go below the low right here at about 170, 171. Let's just remove this because I haven't programmed it properly, right? The colors are very, very pale right now. So the upside target would be about $190. So you're risking about $10 to the upside. To the downside, about $8 below that 171.50, right? So not quite the best risk to reward, guys, but this is a very, very beautiful breakout trade. We can even bring it down to the lower time frames, right? Beautiful hourly uptrend in motion right now. If we want that hourly uptrend to maintain and the daily uptrend momentum to maintain, we can put our stops below pretty much the lows of today, right? Which should be closer to around 176.86 for that breakout continuation trade on Amazon. Looking pretty good as a whole, guys. Nothing bad to say. We've really just been consolidating sideways. What is that daily consolidation sideways, guys? It is a weekly bull flag, in my humble opinion. The bulls playing very good defense in this big green box of support, 173 down to about 159. It is your prior resistance from 2020 and 2021. So I've been saying that the bears are going to have a very hard time breaking through this, and so far they have, right? In the last 4 weeks, they really cannot get anything done in this lower location. when they had their big attempt at it, of course, was Amazon's earnings thereafter, right into our Black Monday session. So that's normal. But since then, you can see the bears have had a very, very tough time. So in my humble opinion, guys, we are possibly looking at the weekly higher lows into weekly uptrend breakout. I like this trade a lot. Amazon is looking extremely gorgeous for some swing trades right now, or even to add to some long-term portfolios. Now, moving into Google, give me a very quick second. Going back to our roots of taking coffee sips on Google. So Google, unfortunately, guys, not doing too much of anything, really kind of still down in the mud, right? As they deal with those Department of Justice lawsuits, and kind of just investor sentiment around the company right now is not the best. But this, we know, does not last forever. A number of companies have gone down this path before. You obviously remember what happened to Apple when they were all the way down here. Same exact concept, right? Every single week, negative news headlines for Apple. And then eventually the rest was history with one good piece of news in terms of their AI. And then obviously we also had Visa. Visa and MasterCard were plagued down here in the lower 260, 250 levels for a very long time as they battled with their own lawsuit headlines as well, and kind of just overall market weakness for, a couple months worth of consolidation. And now the rest is history. And I do believe that Google will follow pretty much that same path. Now, the timing of the bottom is going to be really tough to decipher. The one thing that we have to be confident in, guys, is buying Google when it's already down off the all-time highs, roughly 22, 23%. Excessively solid company. The valuation for this one is extremely cheap. It is the cheapest Mag 7 stock of that list as a whole, which is why I like it. And we're now coming into a very large weekly support zone from back here in April, and also prior in 2021 and 2022, which were the previous all-time highs. So I like Google a lot, but I'd be lying if I told you the bulls are in short-term control, right? Bulls, complete loss of the daily. So daily downtrend for the bears right now. Eventually, we will have to watch for a shift in the hourly uptrend. It all starts, guys, with a shift in the hourly uptrend. No hourly uptrend, we cannot say that the daily bottoms are set right now. So we'll keep an eye on that. But as you can see, guys, very crushed on the daily RSI. Daily RSI is now down to about 27, some of the lowest points that we've had on Google, at least in the last year, if you were to include the Black Monday event. Right? Prior to that, the lowest that Google got here was all the way back in September of 2022. So it's been a very, very long time that Google has not seen these oversold levels on the RSI. And even on the 4-hour here, guys, 4-hour RSI is down to 24. We have not seen that since October of 2023, the big sell-off of last fall. So that's why I like playing Google in these locations right here. Keep an eye on the hourly uptrend shift. And then, of course, we will keep an eye on the size of the daily bounce when that occurs to see if the bulls have it in them to set up for a daily downtrend, reversal into an uptrend, and obviously start recapturing some of this weekly damage that's been done as well. So I love Google in these lower locations, still monitoring for that trend reversal pattern. Moving into Meta right now. Meta also not looking too bad today, literally flat on the day, right? So Meta still in somewhat of a daily downtrend, We'll be watching for the flush of the Friday lows. Break 40.99 to the downside. Unfortunately, your daily downtrend simply continues, and we continue our weekly consolidation on Meta. This has really just been a case in point of a tightening range, guys, ever since the month of February. And I do not believe that Meta is going to be out of this cycle anytime soon. If tech remains kind of weak right now, it's going to be very tough for Meta to really just blast through the all-time highs on their own, right? Not many tech stocks out there have been continuously pushing new all-time highs in the last couple of months. As a matter of fact, the only one that I can think of off the top of my head, one of the larger ones, right, is Oracle. Oracle's the only one with their most recent earnings that have really pushed over and above, but a lot of your software as a service companies or even big tech names are still considerably off of their all-time highs. So remains to be seen if Meta can reverse this. In the event we continue pushing a little bit lower here, guys, I'll be a big fan of playing the support level right here, 483 all the way down to roughly 456. I love buying Meta in these areas right here. Every single time we've made some plays on Meta in that location in the past 6 months, it has been a very good trade. So in the event Meta continues having a little bit of weakness and comes down into this location, I'll be looking to play some shares and maybe even some call debit spreads again. Moving into Microsoft right now, Microsoft finally getting some lift off the bottoms here, guys. We were talking about this one yesterday, right? How we were coming down into some big levels of support down here. 402 down to 390, which has been your support level ever since the early portion of the month of January. They've held this one literally all year. So when we're coming down into here, guys, daily downtrend, we know that we're possibly looking for some weekly higher lows as well. We take a look at the hourly trend, and we knew that if we got a break to the upside of the hourly trend, that we likely get some follow through. That happened first thing in the morning, and Microsoft pretty much never looked back all day. So Microsoft now looking very, very healthy for a possible daily uptrend recapture, right? They've now engulfed the entire most recent leg of selling and now are on their way to possibly be in motion to reset into a new daily uptrend. So any consolidation on Microsoft right now, in my opinion, is going to be a buy, and we are longing the following fashion. If we get some consolidation, possibly back to around 410, 409, this is going to be a small little breakout, retest of that level, stops go below here, and then we're targeting the highs right here about 427. So you're looking about $17 worth of upside, and we're only really risking about $10 worth of downside. So not quite a 2-to-1, but still on one of your most solid companies, guys. I like this trade a lot on Microsoft as a whole. If not, I'll continue to write some short puts down here or even some put credit spreads. Microsoft looking fairly decent. And as I said, what we're looking for here, guys, looking for the weekly uptrend recapture. That would be a break and close above 426. We will see if Microsoft can get that done over the next few weeks, but definitely this is one of my favorite companies in the entire game right now, guys, and they are still down from their all-time highs, roughly about 11%. Year-to-date performance as of now is about 10.79%, which I believe is still underperforming the S&P. So you can have a little bit of a mean reversion right here. Yeah, year-to-date the S&P is up 16%, guys. So Microsoft still one of my favorite plays in all of big tech for a little bit of that mean reversion. Coming into Netflix right now, Netflix down about 0.27%, but really holding a very tight range of accumulation up at these higher levels. We know that we're in somewhat of a daily downtrend on Netflix right now, but we're really not sacrificing too much. I would say that this is more sideways action than a very clear daily downtrend, right? However, if we break the lows of Friday, guys, the daily downtrend simply continues, and we start attacking one of our larger areas of support, 655 down to about 631. I really like that level, guys. Very simple analysis, right? Looking for a weekly higher low for possible further trend continuation beyond the all-time highs. So in the event Netflix continues pulling down here, there is a little bit of a trade opportunity. I would be tempted to throw some possible call debit spreads at it in the event the bulls are able to recapture and blast with the all-time highs. Could be a very beautiful trade setup as a whole, but I like Netflix, guys. In my opinion, this is a longer duration bull flag. We're holding very close to the all-time highs, guys, and I wouldn't be surprised any further bullishness in the QQQs can really propel this one into a new weekly uptrend, smash the all-time highs, and just continue this glorious monthly march forward and higher beyond those all-time highs. Now, moving into NVIDIA. So NVIDIA, a little bit more tricky, right? NVIDIA's kind of been, fairly muted as to what we've been used to with NVIDIA, right? So really not having much price action at all. What we're kind of counting on is NVIDIA's able to protect this lower bound of support. 105 down to about $93 is this massive range. What the bulls are trying to do on the smaller time frames here, guys, we are trying to set up for the hourly uptrend in motion, but as you can see, it's very weak, right? Usually we're used to seeing big leaps and bounds on those hourly uptrend legs from NVIDIA, but we're not getting it. Just goes to show that the sector right now is a little bit muted for my liking. That being said, what are the bulls trying to do? Trying to put in a daily lower high, right? So we know the bears are in short-term control of this daily downtrend. We're expecting the lower high, but where does that lower high get set? If it gets set right here when we break the lows, guys, well, it's not going to be looking the best, right? However, if we can recapture up to 50-60% of this most recent downswing, that would put us into this area of overhead resistance. 119 down to about 114 is going to be the area that I'm watching for the bulls to kind of pull up into, and then in the event we get rejected, going to be watching, can they sit up for the daily higher lows for the daily uptrend shift? So it's all up to the bulls right now to play some defense to kind of get us into maybe a tightening range of accumulation on NVIDIA. We know the sector is out of favor. That would be the best case scenario to kind of dive into a tightening range of accumulation as we did at the same period in time last year, last fall in 2023, right? So the way I'm playing NVIDIA, guys, is I'm not really playing it with any short-term call options. The way I'll be continuously playing it is I'm going to be writing short puts well below the current market price, guys, to collect some premium and to get better deals on these companies in the event that the drawdowns continue, right? So that is my preferred way of playing all semiconductor names, just because the volatility is good and the premiums are quite high right now. Moving into Tesla. Tesla up 4.58%. I mean, Tesla has really been coming alive, guys, over the last couple of days, right? Very good volatility on Tesla. I am still not convinced, however, right? Tesla, excuse me. Tesla's doing good because the rest of the QQQs are doing good, but I do not think that this one has any company-specific good things to look forward to other than the robo-taxi event. We'll see how that robo-taxi event is, goes for the company, but I'm not convinced yet, guys, that Tesla full self-driving is ready for autonomous applications for everywhere in the world. It might just be for certain locations that are better mapped than others. However, right, we will keep an eye on this one, but I do have my reservations for Tesla right now, right? And I am slightly biased because I do have a little bit of a short position on the company right now. Interest rates, however, on a neutral and objective fashion, interest rates should help the company, but as we know, guys, it's not going to help them in a snap of a finger. When rates come down, it's going to take a lot of people, it's going to take a lot of time for people to feel that they have the buying power again to go out there and buy a new car. So we'll be keeping a close watch on Tesla. For the most part, though, guys, protecting this daily uptrend right now. If we get a break of 235 to the upside, we'll be looking for the gap fill after earnings, possibly attacking all the way up to 250. That will be the most bullish case scenario. In the event we can continue consolidating, may just dive into a furtherance of a tightening range here, guys, right? As you kind of build up some of that anticipation for their October robo-taxi event. So I would not be surprised, guys, if Tesla is not really able to gain much in terms of the levels. Maybe we just stay range bound until that robo-taxi event, unless the QQQs go on an absolute tear and really take Tesla with them, right? Not my first pick, however. I'm more looking for, in the event we come lower, 210 to 205, I'll be looking to maybe play some short puts in the lower 190, 185 range, just to benefit from a little bit of that volatility and the more defined support range down there. And now lastly, moving into Palantir. Palantir, not with a very bad day today at all, right? 0.46% to the upside, down a little bit more in the after hours, but still continuing its momentum after that S&P inclusion. Now keep an eye on Palantir, guys. The last level of resistance, I mean, we can zoom in on the daily just to show you guys this level, right? So the last area of resistance, the most notable one is going to be right here. Let me just throw it on the chart real quick. Oops, that's the wrong chart. Why did we go into PayPal? So let's move back here on Palantir. My mistake. So let's move back here, and now let's actually put a line on the chart. Let me make sure I got the hotkeys right. It's going to be this one right here, right? $38, 38, let's call it about 38 to about 39.11. This tight little range at the prior all-time highs. That is the last line of defense for the bears, essentially, right? That the bulls have to get through right now. So that is still a considerable amount of ways away, but we would be lying if we said the bulls aren't in full control of this chart. Keep a very close eye, guys, on the hourly time frame. As you can see, hourly uptrend is very nice. We lost it briefly today, and now the bulls are trying to push a little bit further. Keep an eye on these lows, guys, 33.71. If we lose those before putting in new highs, hourly downtrend is underway, and we may just have a little bit of a period of daily consolidation. Where can we maybe come back into? This area right here, 32.73 down about 31.52. This is your gap fill location. It is also prior resistance for the market, should be current support, and a lot of your shorter term moving averages are curling up into that area as well. Very tough for me to chase Palantir at these levels here, guys. For me right now, it is just a hold. Excuse me. I'm not adding to the position. I'm not selling any of my long-term shares. It is just a hold for me right now. In the event we see a little bit of a pullback, guys, that is when I'm going to be interested to be writing some short puts at the lower bound of support right here and maybe the 31 down about $30 range. But as of now, kind of a no-touch position for me. The momentum is entirely favoring the bulls. Just keep a close watch, especially if you're in this one for a short-term trade. Keep a close watch on the loss of your hourly time frame and the loss of this 12 EMA, guys. That will undoubtedly signal daily consolidation is underway. So that is possibly when you want to be exiting some of those shorter term call options and maybe being able to reset a little bit lower, right? Not financial advice, just the way that I'm looking at the stock right now. So that's pretty much everything, guys, in terms of our stock market rundown. Hopefully you appreciated that. Now let's dive into a few swing trades that I'm going to be heavily looking at in the most recent or in the upcoming days and upcoming weeks as well. Airbnb, guys. Airbnb has been having a very tight zone of accumulation down here. I love writing short puts in the 111 down to 110 area, and maybe even tempted, guys, to throw some call debit spreads at this one because it is looking extremely tight right now, and we may just be getting some more weekly momentum coming. Weekly has been oversold now for a better part of the last 6 weeks in a row. This is the longest period of this stock being weekly oversold in the company's public history, right? So could be a decent little swing trade to the upside in the event we use some call debit spreads, which I'm already in, and also in the event we want to write some short puts below the market, could provide some very nice ideal entry opportunities for that one specifically. Now, the second stock we'll be looking at, guys, is UPS. So UPS also kind of a similar pattern. However, this one looking like it does want to start breaking to the upside, right? We are now above our short-term moving averages, and the hourly uptrend is looking very, very, very bullish leading into tomorrow, right? Looking like they do finally want to have a little bit of an upswing here, guys, into maybe the mid 130s. 132 all the way up to our higher resistance level of about that 134. So this could be a very decent little swing trade. We've been accumulating some UPS positions at the lower end of this, but could be a very, very interesting breakout trade if that is your type of style. And obviously on the longer term timeframes, guys, we're looking for this weekly uptrend recapture and looking to start recapturing a lot of these higher 130s, even up to the 140 levels. UPS has been absolutely crushed looking for the monthly higher lows. So there is some shorter form swing trades on this one, guys, but there is also some longer form swing trades like position trades, right, that we can keep maybe over the next few months and really monitor this recovery by UPS. And on top of that, they pay a 5% dividend. So very healthy company to be building a position in these lower levels. Now we get into some juicier swing trades. So those are kind of some accumulation trades in terms of the ones that are kind of ready right now. BLDR, in my humble opinion right now, is pretty much ready, right? We have daily downtrend consolidation into a very large area of support, 165 down to about 159. On the weekly, guys, this is a weekly break out of the range, retest, and possibly run. Now, back above all of your weekly moving averages too, looking quite good. And look on the monthly, guys, monthly higher low is set, possibly just looking for the monthly trend continuation. So I like this one, guys. Monthly uptrend, weekly uptrend, and now we have the daily downtrend coming to an end and the bulls looking to push. So the stop loss goes below here pretty much, very tight stop loss, 165, and then we're pretty much targeting our all-time highs, or not all-time highs, but the weekly highs for the continuation of the weekly rally. So the risk reward on this one is looking very, very juicy in my humble opinion. Another one, similar setup, guys. I love these bull flags, GLD gold, right? So this is a direct ETF in relation to the gold or in relation to XAU USD, right? So looking very, very healthy. Obviously, we know gold is in a massive monthly uptrend right now. It is in a gorgeous weekly uptrend too. Look at this tight bull flag of accumulation above the all-time highs and above our area of prior support, right? Very nice, tight bull flag, guys, above the 12 EMA, looking for the breakout of the all-time highs. This one is looking very, very, very healthy in my humble opinion, guys. So I will be looking at this one probably as of tomorrow or the day after to build some positions for that possible breakout, right? We have some very good levels to base our trades off of. The stop loss would be down here, about 228. That would be a fairly wide stop loss, right? But would invalidate us in the event we break. That would be daily downtrend, and we reset a bit lower for the exact same trade. But I'm looking for this one for the upcoming breakout so we can keep a very tight stop loss and possibly even go for some psychological levels such as the 240, which is above us right now. GLD is looking primed, guys, and is one of your more defensive names in the peak of the recession narrative, right? Now, moving on to another tech stock, guys, Intuit. I've been talking about this one a long time in the past couple of weeks, but Intuit kind of looking like it wants to mount a little bit of a rally right now. We're now closing on the daily above our moving averages, and the hourly uptrend looks extremely healthy as well, right? Look at this momentum push into the end of the day. So Intuit is looking very nice for a longer duration swing trade, guys. As I said, we were getting in at these levels right here, and we will be targeting probably the 52-week highs around kind of the high 650s to about that 660 level, right? On the monthly, this is looking very good. This is a monthly bull flag or monthly cup and handle, guys, for some potential trend breakouts later on throughout the month. So this also is a longer duration swing trade position, guys. Look at this beautiful support, right? Looking to kind of recapture some of these higher levels. So I like Intuit for a swing trade even at these levels. Now, one of the ones that I'm looking at, guys, for some short puts in semiconductors has to be ON Semiconductor. This is one of my favorite semiconductors to play short puts just because of the massive area of support that we're in right now. I was actually looking at this one with a lot of our Discord members today, and if we can get some premium, guys, $63, $64 down there, I think it's a very attractive proposition. Very, one of your more safer plays in semiconductors right now that we can make some attempts for the wheel trading strategy. So I felt that I should include this as part of a swing trade because it's a great opportunity to write some short puts. And also the stock price of the company is not too elevated. So you don't need that much capital to run to be writing short puts on this one, right? Now we continue with a few more breakout trades. Palo Alto Networks, guys. You guys will notice all of my trades are for trend continuation because therefore, especially the shorter term runs, right? We want to go with ones where the trend is with us. So as we can see, weekly uptrend is nice right now. We are now back testing prior resistance, which is now support. The 12 EMA is there on the weekly. Let's zoom into the daily. So we're looking for the daily, weekly higher lows, right? And now the daily downtrend starting to reverse a little bit. This is like BLDR, right? Starting to reverse a little bit right now. So we have very tight stops. We can put our stops below here at about 333, and then we're targeting pretty much the breakout of the 375 location because that is our weekly breakout level right there, all the way up to roughly the all-time highs. So Palo Alto Networks looking kind of primed as well for a little bit of a swing trade, guys, looking pretty much for the weekly higher low to be set and looking for the bulls to go for some of that juicy trend expansion as we try and now reverse this daily downtrend into more of a daily uptrend with the hourly leading the fashion right on the look. This is what really got it for me, guys. Inverse head and shoulders on the hourly. So we could get some very nice continuation on Palo Alto Networks. Just a swing trade idea, not financial advice at all, guys. And the last one that I'm going to be presenting you guys, I have tons more, but this is the last one for today, right? Now, the last one is Waste Connections. The exact same setup here, guys, right? What are we looking for? Weekly uptrend continuation right now, looking for the weekly higher lows to be set. We are reacting beautifully from our previous all-time high resistance right now, which is currently acting as support. So 2 weeks of consolidation. Let's zoom in on the daily time frame. Gorgeous daily bull flag right now, and now we're starting to engulf, right? Take a look at your hourly. I always notice the hourly, guys. Big engulfing move, massive hourly downtrend this entire time. Big engulfing move. Now the bulls are looking to try and reset to the upside. So once again, this is a trade we can go into with a relatively tight stop loss. Stop loss goes below the lows because in the event we're wrong, we get invalidated by the loss of the daily uptrend and furtherance of weekly consolidation, potentially sending us all the way down into maybe, the lower portion right here, 180, 179. But at a first glance, we can keep a relatively tight stop loss right here. And then we're obviously going for, the breakout of the all-time highs, possibly even into the $190 psychological level. That would be my take profit target for Waste Connection. Such a solid defensive value-oriented company, guys, that performs very, very well in, recessionary narratives and in any overall market as a whole. So I love going with the ones that are presenting very, very nice bull flags at the top in some gorgeous weekly uptrends. So those are going to be just a few of the trades that I figured that it would be noteworthy to present to you guys. So hopefully you guys found that educational. If you enjoyed today's video, guys, consider dropping a like. Would really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. We do these videos every Monday through Friday after the close. So hopefully to see you back in one of them in the future. And lastly, guys, if you have any questions at all, especially in these markets, please feel free to leave them down below in the comments. Anything you want. If you want me to look at a specific stock for you, some technical analysis, if you want a second opinion on an options play, not financial advice, of course, just my humble opinion, or macro discussion about the economy, anything you want, feel free to leave it down below, and I'll usually get back to you within the first 24 hours. So take care, guys. Have a very beautiful trading session tomorrow, and I'll see you tomorrow after the close. Peace.